our mortgage advisor says we qualify for $1 million loan, but realistically we can't afford more than $700K in repayments, and that's about $5,000 to $6,000 a month for 30 years. If one of us stops working for any reason, things get a bit tight fast, nothing left for the kids, emergencies, or even basic maintenance. We've looked at every alternative: granny flats, land only, prefab builds, tiny homes.
Nice.
But costs still blow out, or the trade-offs aren't realistic. At this point, renting feels more practical, still expensive, but about half the cost of a mortgage. What are the others doing? Is there something we're missing?
Okay, awesome. So this has got so many angles to it. I love this. This is a really good question. Let's deal with the part first about buying for $1 million. The broker says that you can afford $1 million. The bank's willing to give it to you, but they think that they can only realistically do $700,000. Mm-hmm. What's the advice in this scenario?
Look, it's good that they're not taking the bait per se in that sense. Like obviously, with mortgage brokers, they're always going to give you everyone is very common to ask, what is my maximum borrowing capacity? And that's a very common phrase used in the broking term and broking world. And a lot of customers and consumers want to know that, what's their maximum borrowing capacity. And a lot of the times they actually might take that out and use the full maximum. And it gets really a bit dangerous in that sense, because if something changes, if your income changes, or if one of you have to stop working, emergencies happen, that monthly repayment becomes really hard to start reaching, and it's really dangerous. So kudos to this couple, knowing that, okay, we can't afford on paper $1 million, but let's look at the $700,000 mark, because realistically they can afford $5,000 to $6,000. So they obviously have some sort of budget in place already as a couple, and that's a really good start.
Yeah. So I think for me, definitely what comes down to like risk profile, right? Mm-hmm. So this is where my wife and I disagree. She is the complete other end of the spectrum, which sort of evens me out. So for me, I'd be like, $1 million, yeah, can we push it higher? Let's do it. And my thought is on two things with that. The first one is you don't know what's going to happen in the future. No. And people are really good at adjusting to emergencies really quickly. Mm-hmm. So if you did lose your job, what's the likely thing that's going to happen? You're going to try and find income as quickly as possible, right? That's the first side. The second side of my brain is thinking, well, if a property is going to grow by 10% per annum, the higher the value of that property in the beginning, then you're going to get more growth. So 10% of 700,000 is 70 grand a year. 10% of $1 million is 100 grand a year. So that's sort of where my risky brain's going. Mm. But I understand that not everyone works like that. So in this scenario, it looks like what they're saying is that $700,000 won't meet where they want to actually, won't be enough for where they actually want to buy to live. So there's a couple of options that they've got. They could take the $1 million mortgage and put contingencies in place for if bad stuff happened. Mm. So as an example, the first thing that they should be doing is having an emergency fund. And I would suggest that sitting in savings, obviously in cash, either they can put that on the offset account on the new mortgage, or they can put that in a high interest earning account. And that should be at least 6 weeks, but potentially 12 weeks worth of income.
Yep. For two people.
So then what you're doing is you're thinking, okay, if we've got 12 weeks worth of our expenses basically covered and I lost my job, could I then go and find another job at the same level of income in 12 weeks? Chances are you probably could, depending on the industry that you're working in, and unless it's very niche. Mm-hmm. There's one of my mates said to me a couple of weeks ago, he said, I've only got 2 years worth of work left. I said, why is that? And he said he dismantles this very specific machine that's used in manufacturing, and there's only 3 left in the country.
Oh, God.
And it takes him like 6 months to dismantle them. And so because there's only 3 left, once they're gone and shipped overseas, he's done. Oh, God. So he's sort of cooked, but he knows that there's a time frame on that. So he's got time to go and do it. He's not going to do anything about it. As soon as that last one's done, then he's going to go, oh, this is a shock to me, just like Christmas is every year to a lot of our clients. But in that specific scenario, if you've got 3 months, for most people, That should be plenty. Some people do 6 months, some people do 12 months, some people do 1 month, and that really comes back down to the risk profile. So that's my first thought with that. The second thought is that if that doesn't quench the risk thirst and they still don't like the idea of having $1 million mortgage, then you could buy the $700,000 property and rent vest somewhere else, make that your investment and do that properly, and then stay, in the place that you actually want to. Or I think the third option that I could think of is move to a different location where the properties are cheaper, so that you've got that option.
For sure. And at $700,000, if you find a location that suits your property needs and lifestyle and everything like that, you can then use that extra money that you would have saved on that million instead to pay off that $700,000 much quicker than you would normally, and that would save you a ton of interest overall over time too. So that could help.
I think the thing that people also miss in this whole renting versus buying scenario is they look at how much cheaper it is from a cash flow perspective. So my mortgage is $1,000, rent is $500, so it's $500 that I'm saving. What they're not factoring in is the potential capital growth of the property. And so if you've got the ability to pay $500 a week but get $100,000 a year in growth potential, now obviously there's risks associated with that and it's not guaranteed, and these are all just assumption numbers, certainly not advice that I'm giving to people who are listening or watching this, because I don't know their situation at all. But that's the part that's discounted, where it's just a straight comparison on cash, and that's not...
No, it's never the same.
That's not the full picture, is it? So, we see that as well. But I think that is, the real question at the end is, what are others doing? Is there something that's missing? And there are things that other people are doing. They have an emergency fund so that they don't feel so lost or under the pump or worried. And the second thing is that if they're not buying in the location that they want to live, then they're buying somewhere else.
I guess this is more so of the last two. This is based around people buying properties, and it's mostly around couples buying properties. Is like, as an ex-mortgage broker, my biggest advice for people going to buy their first property is never of, say if you need to save $80,000 to $100,000 for your first home because that's your dream home, this is the home that you want to buy, and it's worth $700,000 or whatever it is. People save that $100,000 and then spend that $100,000 on that property. They never actually save $130,000 because they need that extra $30,000 for that extra 12 weeks of expenses and whatever it is. As soon as they hit that number, they go ahead and go purchase that property instead of saving that little bit extra while you're still probably at home with your parents, not paying any rent, not paying any mortgages. Save that little bit extra and then go buy that property. So you're comfortable when you're buying your property, you still have that extra funds to save as a couple once you're in that property of yours. So
exactly. And the part that's missing in this that we don't know is how much of a deposit are they putting down, and what's the loan to value ratio, meaning how much of the property purchase are they actually funding through the bank. So if it's 5% deposit on $1 million, then things are far tighter than if that's a 20% deposit.
Exactly.
And if you're somebody who's got 5% deposit to purchase, that thing that you said, there are going to be other expenses with properties as soon as you move into it. Something's not going to work, or it's not going to be the way that you want it, or you need furniture, or when you see those people who build this brand new house and there's no driveway and no garden, it's like, oh, okay, you've run out of money. I get it. So that's something that people need to think about when they're going and doing this stuff, and that's a perfect thing.
Not rich,